The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Oh no. Oh, oh just sorry. Sorry, so I just turned on the camera and I see that my face is a little bit shiny, huh? It must be the cream that I put on. So I just went. So for those of you who don't know, I just came back from Japan. Right, bought a few bought a few what's that? Facial products, right? And yeah. Okay. Welcome, welcome, welcome. Good evening, everyone. Oops, hold on. Okay, guys, just give me a sec, all right? I think there is some technical issues. Just give me 1 sec. Stay on the webinar, right? If it gets connected, then of course we'll then rejoin again. Okay, don't worry. Okay, just give me a sec, guys. Yeah, I got sound already. Yeah. Okay, yeah. But I have to hold on, let me see if I can do it here. Okay, there we go. Okay, okay. Everything good? Everything good? Okay? Okay. Welcome. Apologies. Right, apologies. Right. I think there's some technical issues just earlier. So so as I was saying, right? Good evening. Now, as I was saying, right? Now something happened over last week, and last week, I actually wanted. Last week I didn't know, right, that Tuesday was the last day that I'll be having webinars with you guys, right? So on Wednesday and Thursday, right, there's no webinar, right, because of the Hari Raya. Okay, so something happened. Now, for those of you who have been following my Instagram, sorry, those of you who have been following my Instagram, you would have known that on Saturday, sorry, on Sunday, right? Sunday I actually posted something, right? I actually posted on something on my Instagram on Sunday. So on Sunday, what happened was that there was something very, very, really interesting happened, basically, right? On Sunday, Iran actually attacked Israel, right? So Iran attacked Israel on Sunday, right? And how did the markets react? Was it Sunday? Yeah, it was Sunday. So how did the market react? Right. So we have the crypto market going down. All the other, we have some really, really major price movement across all the FX pairs, right? And yeah, so I think, right now we do have three. I would say we do have about three major conflicts right now. So number one is the Ukraine and Russia war. Number two is the Israel and Palestine war, right, along the Gaza Strip. And of course, right now the other conflict is that Iran, right? Iran attack, right? Iran launched an airstrike, right, on Israel. Okay, right? So a lot of things has been going on, right? So first I want to go ahead and look at oil, right? I want to go and look at oil, right? So oil is currently consolidating, right? So unless, right? So this is my opinion, right? If a country were to attack an oil producing country, right? Like for example, Iran, Iraq, or Kuwait, right? Then of course it will cause oil prices to go up. Okay, so this is my fundamental analysis, right? So right now, right, we can also expect to see. Let's look at gold, right? We can expect to see gold also rallying up towards the upside, right? I mean, no surprise, right? Gold. I mean, at this rate, right? I do foresee gold going back up to, I don't know, let's say $3,000 or something like that, right? So back in those days, right, when I first started trading, right, gold was around a 1.6, right, 1.6, somewhere around there, or even lower. So I still remember 1.6, somewhere around there, right? Sorry, or even like 1.3, right? So back then when I first started trading, right? So it's just amazing, right, to see how much gold has gone up over time, right? And of course, we do have this high over here, which is the COVID-19 period, there, of course, right now. This impulsive move is what we call the war period, right? So this is what we call the war period. So during this whole moves here, right? It's during the Russia war. It's during the it's from the Russia war, from all the major conflicts that's happening, right? Okay. So yeah, lots of volatility, which is what we like, right? Across the economy, right? Of course, we do have some trades that we kind of got stop out, right? In profits, right? Very 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 important. We got stop out in profits. AUD we are still in this trade currently, still running. Okay, currently we are still running. GBP JPY, unfortunately, right, we are not in this trade anymore. But of course, I could not call this out, right? But of course, I did enter it on my own, right? So we got stop out at 1.9 at about 1 to 10, right? Risk reward ratio. Sorry, a 1 to 5. Okay, we got stop out at a 1 to 6 risk reward ratio. So somewhere around there, 1 to 5, 1 to 6 risk reward ratio, right? Currently I am still in this trade on GBJPY, right? And this happened on this happened on Friday, right? So I think way before that, right? Way before that. On Thursday. I thought I have a webinar with you guys, right? But unfortunately, I did not have a webinar with you guys on Thursday. So Thursday, I actually wanted to enter a trade on GBJPY, right? So I mean, if there was a webinar, I wanted to tell you guys, hey, if price gets stop out, right, at our stop loss in profits, right, I will enter another trade. I entered the GBJPY trade. Very good, fantastic. So proud of you, Kelvin. Right. So GBJPY, right? So for those of you who have entered this, so we have this trade over here, right? So we have this one over here that we have entered together. This one, some of you guys entered, some of you guys did not enter, right? But don't worry, right? For those of you who have entered here, right? I have moved my stop loss to around 1 to 5, right? Risk reward ratio. I have moved my stop loss to 1.395. Sorry, 191.350, right? Giving us to secure a really nice 1 to about a 1 to 6, right? Risk reward ratio on this trade, right? On JPY, right? But don't worry, right? I think for the most part, I think AUDJPY will be we already hit the profit level, right? TP already hit for AUDJPY. GBJPY, I still have this position running, right? But for those of you who did not enter the second trade, right? I mean, you guys still make some profits, right? 1 to 6 risk reward ratio. It's not too bad. Okay. USD JPY, I am still holding on to this trade. This will be a massive trade. Currently, it is still pushing towards the upside. Currently, we are at a very nice 1 to. Currently, we are at a really nice 1 to. How much is it? A 1 to 26. Sorry, 1 to 28.6 risk reward ratio on a USD JPY. Okay. Euro CHF as well. Euro CHF, we are still in this trade, right? For those of you who have entered Euro CHF, right? On all the trades called out, right, live during a webinar, right? Currently, we are running at a 1.6, 1 to 6 risk reward ratio on this trade on Euro CHF. Now, let's move our stop loss to somewhere around here, securing a very nice 1 to. Yeah, okay. Let's move our stop loss to here, right? 0.97700, right? To secure some profits, right? Securing at least, right, a 1 to 3.5 risk reward ratio, right, on UCHF, right? Okay. So these are the major, these are some of the updates, right? Don't worry, right? After the updates. Okay, so after the updates, what I'll do is I'll go through the slides, right? Don't worry. right? And then of course after the slides, we'll look for other trading opportunities, right? GBP CHF, I'm not going to even look at it right now. USD CHF, we are still currently looking to take short positions, right, on USD CHF around this level. NZD CHF, we can go ahead and remove our sell limit order on NZD CHF. So go ahead and remove that. Oops. Right, price did not hit our sell limit order. NZD CAD as well, right? I think it's such a bummer that NZD CAD, you know, it almost hit our sell limit order, but it did not hit our sell limit order, right? So kind of a pain. Yeah, it's kind of a pain they did not hit our sell limit order, right? So even though if I were to set it 5 pips lower, right, it would still not hit our sell limit order. Yeah. So NZD CAD, nah, we just move on, right? We just move on, right? If not, I mean, but of course, it's also very, very nice to see that, you know, price actually is respecting our key levels, right? Even though we are not in this trade, but don't worry, we are still in a lot of trade, right? So NZD CAD, I removed that sell limit order. AUD CAD as well. AUD CAD, hold on, let me just look at the, yeah. AUD CAD, I will still be looking at AUD CAD, but of course for now, we'll just remove our sell limit order on AUD CAD and AUD CHF as well. So lots of missed opportunities on over here, right? So currently we are still holding on to USD CHF. GBP CHF, I'm not really going to look at it because it's a very, very far trade, right? It's a very, very long trade. So USD CHF. Now USD CHF, for those of you who have entered this trade with me, right, go ahead and remove it, right, and then of course recalculate, right, recalculate your position size, right, as it gets closer. Okay, so as price get closer to our entry, right, we have to update our position size because the position size will change, right, according to the exchange rate between the US dollar and the Switzerland franc. Okay. And of course, we have Euro CHF as well. Okay, everything is very, very nice. Very, very nicely done. Oops. So, 1 to 43. So this is our target. Oops, 150. 150 point, what's that? I remember 300. Oops. Our target was somewhere around here, 156. 43.5. There you go. I think I will take profit level for USD JPY somewhere around here. I will. To be honest, it's kind of like an open take profit level, right? It's not a fixed take profit level, but of course, okay. So now let me tell you the game plan for USD JPY, right? So for USD JPY, I'm just waiting to see it do another impulsive move, right? A very, very sharp impulsive move towards the upside. Then of course I will be closing it manually, right? So for USD JPY, we are currently very, very deep in profits, right? So I think you don't have to worry about that. You don't have to worry about not getting enough profits, right, on a USD JPY, right? So USD JPY, we have held this trade since since the 1st of February, right, until now. Okay, Can I ask why you put your stop loss there at USCHF? I don't see. Okay, sure. Let's go ahead and go to USCHF. Now, can I ask why would you put your stop loss at there for USCHF, as I don't see a lower high over there? My stop loss is at 1.80. Okay. Oh, you mean the new stop loss? Do you mean the new stop loss? So stop loss is currently 0.98280. 98280. Okay, so this is your stop loss. I see. Okay, sure. Let me explain why I put my stop loss over here. Yeah, okay. Let me explain why I put my stop loss here. Now, okay. So we can see that, you know, this area here, price have some rejections here, right? We can see that there is a key level here which price interacted with quite a lot, right? So yeah, so now we do see that there is a key level over here, right, on USCHF, right? And now I don't want to put my stop loss any lower, right? So I think that, you know, putting my stop loss here, right, giving it some giving price some room to breathe, right? It should be sufficient, right? Because now we do have this key level here which price might interact with, right? But of course, we have to account for random spikes, right? Which will hit our stop loss at in profits. So I want to give my trade, right, the best chance for it to run, right? And that's why I move my stop loss just slightly above this area, slightly above this key level here, just to give it some room to breathe, right? So over here we do have a key level which price interacted with here a lot. Okay. Okay, now I see. Okay, very good. No worries, Kelvin. Anything you don't know, can just ask. Okay. All right. So yeah, my apologies, because sometimes, right, sometimes I don't draw out everything, right? Sometimes it's just because I've been doing this for many years, right? And most of the times, not most of the time, sometimes, right, when I see something, right, I'll just plot it, right? I will just okay, I mean it's in my mind, right? But no, I don't really draw it, right? But of course, let me try my best to draw out the key levels for you guys to see, right? But of course, if I missed out any key levels, right, and you don't understand anything, right, just let me know in the questions, and of course I'll be happy to answer it. Right, so this is the key level, right? And of course I want to strip my stop loss a little bit higher, right, just to give it some room for the trade to breathe, right? So this is my stop loss and break even. All right, okay. Now let's really go through managing your risk, right? Session 4 right, let's quickly go through the slides, right? No, I don't know about you guys, right? But how do you like this? Okay, how do you like this? How do you like this this schedule, right? How do you like this schedule? Because give me some feedbacks. Give me some feedbacks, because here's the thing, right? Here's the thing. The what I have done is that I have yeah. So what I have done is I have done I have planned out I have planned out the webinar, right, in such a way that, you know, for, you know, and every single week, right, there will be a live trading and Q&A sessions, right? And of course, towards the end of webinars, webinar season, right, there will be there will be at least like what, 1 to 2 weeks, right, 2 weeks worth of just Q&A and live trading, right? So just let me know, right, if you guys want more, live trading, right? But of course it cannot all be live trading, right? Because I mean, I have to cater to the new traders who is coming in to learn. Okay, so let me know what you guys think, right? So I think every week, right, there will be at least one day of live trading session, right? And of course, because in 2024, right, I have already scheduled the webinar in such a way that now there will be more live trading sessions, right, for you guys, right, to kind of earn some money and learn together with me. Okay, so let me know what you guys think, right? Okay. Now let's go ahead and okay, hold on, so, yes, more live trading session, but I feel that it's important to teach the basics also. Okay, okay. Yeah. So let me let me know what you guys think, right? If you guys want more live sessions, live trading session, if you think the current schedule is good, right? Just give me some feedbacks. Okay, guys, your feedbacks is greatly appreciated, right? So now let's go ahead and manage and go through the slides, managing your risk, right? So learning points today, right? You'll be learning to identify your risk tolerance, setting your risk parameters, right? We'll talk about the static risk and compounding risk management system, right? We'll also be calculating the percentage risk per trade and of course your risk reward ratio. Okay, oops. Oops, hold on. Okay. Now, risk tolerance. Now, what is risk tolerance? Risk tolerance is your acceptance, right, of the outcome of risk, right? And risk tolerance is set into it's expressed, right, as a as the as a percentage, right, in drawdown, right? So now, why do I say that risk tolerance is expressed as a percentage in drawdown, right? So meaning to say that, so if you don't know how many percent and how much you are going to risk, how can you accept the risk, right? So like, let's say for example, if you enter a trade and you don't know how much you're going to lose, how can you accept that you're going to lose X amount of money if you don't know how much you're going to lose, or what is the percentage of your account that you're going to lose, right? So risk tolerance, we're talking about the acceptance of the outcome of risk, right? So everything has to do with risk, right? So like let's say for example you go to a casino, right, and you and then of course maybe let's say you play a round of roulette, right, and let's say you bet $50, right? Is that $50? Yeah, I think so. So if you bet, if you go to the roulette table, you bet $50, the most you can lose is $50, right? So it's either you bet the number, you bet on the you bet on the color, or you bet on, yeah. So I think it's just number and color, right? So you go to casino, you know how much you're gonna lose. You're gonna bet $50. Now in the forex market, it's slightly different, right? So let's say maybe you have a $10,000 trading account, right, and you don't know how much you're going to lose, right? So when you don't know how much you're going to lose, how can you accept the risk, right? How can you accept the risk of losing, right? So that's very, very important, where we go through how to calculate your risk and everything, right? So 5 factors that influence risk tolerance. Now, risk tolerance. So, it's a bit it's a bit like cliche to say this, right? But okay, so number one, okay, let's look at time. Let's look at the five factors, right? Time horizons, right? Financial goals, age, portfolio size, and comfort level. Now, time horizon. Now, time horizon refers to how long do you want to hold, how long do you want to be invested, right? Or how long do you want to hold the trade for? Okay, so that's time horizon. Financial goals, right? What is your financial goals? Now, the financial goals have to be in par with your performance, right? So if you're not performing well, you need to risk more, right, in order to achieve your financial goals, right? Okay. If you are performing well, you don't have to risk as much, right, to achieve your financial goals, right? So, and how do you know your performance? Back test and forward test, right? So for back test, when you gather data, then you forward test, right? So a lot of people, they don't do this, right? And then they just start trading right away. And then what happens is that, they can never be profitable. A few years, 5 years, 6 years later, they're still not profitable, right? Okay. So age. Now, age is a very, very common factor, right? So it's the truth, right, to say that, when you are young, or when you're younger, when you're in your 20s, when you're in your 30s, right, you have an age advantage, right? Because you still have time. You still have time to make mistakes. You still have time to just burn money away, right? Compared to someone who is, at 60 years old or at 70 years old, right? And then of course they're risking their retirement fund, right? That's I mean I've seen so many people, right? So many elderly, right? 50, no, not 50, so maybe 60, 70 years old, right? And then of course they want to get into forex, they want to get into crypto and everything. And then what happens is that, because a lot of these elderly folks, right? They have the mindset of getting rich quick, right? Trying to get rich, trying to make a big buck, right? Before, for their retirement, so that they can enjoy their life. They must be thinking, hey, I've been working so hard, right? For the first half of my, for the first, well, yeah, probably for the first half of my life, right? I want to really enjoy and be rich, right? Have some money to spend, right? So what happens is that, they go into forex, they go into trading, go to investing, right? And then of course they lose a lot of money, right? And that's really, really unwise, right? So if you are someone who is between, I don't know, maybe 20 to 40 years old, I would say that you still have time. It's not that when the older you get, you cannot, it's more riskier for you, right? Sure, if you are 60, if you're someone who is 60, 70 years old, right, you have your retirement fund, right? And apart from your retirement fund, you still have additional funds that you just bought, or you just want to you just suddenly have the interest, right, to learn about trading forex or investing or crypto, whatever. Then of course go ahead, right? But of course, if you are someone, or if you know someone, right, who is in their 60s or in their 70s, and they try, and of course they're just starting to get into forex, and then of course risking their retirement fund, please tell them, right, don't do it, right? Because I've seen so many old people, right? So a lot of people, right, they ask me, hey, why don't you just sell courses, right? Sell courses, $500, $700, let them attend for like 3 days or whatever, right? And no, here's the thing, right? I know a lot of people in Singapore. I mean, I know them personally, right? They're selling courses, but you name it, right? Any YouTubers that any YouTube ads, right, that you see, right? Whether is it that crypto or forex, right? Selling courses, right? I know them personally, right? And every time I see their videos, right, or anytime when I come to visit them, right, and then I see the seminar room full of like, a lot of people, have white hair and everything, I shake my head, right? Because not only not only, I mean, uh, it's kind of sad lah to see, people getting scammed like that, right? It's I mean, please know that I say that I know them personally. I didn't say that they're my friends or they're affiliated with me, right? So I don't believe that learning forex or anything can be done in 3 days, right? And of course and of course the course sellers, the gurus, they know that, right? And of course what they do is that they get you to invest, to get you to spend a little bit of money, right? Maybe $700 for maybe a 3-day workshop, right? And they know that during this 3-day workshop, you cannot learn everything, or you cannot learn, you probably just touch the basics of the basics, right? And then of course they will upsell you they'll upsell you, right? Okay, you want to learn some more, right? You want to learn some more? Okay, you have to pay, you have to attend another class, right? And then of course you just keep spending, right? And then of course, I mean, it's just a very, very inefficient way of making money, right? To me, if you know how to trade, just trade, right? Don't need to go around teaching, don't need to go around selling courses, right? $700. I mean, like, what is $700? What is $700? $700 is probably is less than it's less than what my brokers, right, charge me on commission, right, per trade. Okay, because yes, I know it is quite a lot, but of course you have to then take the size of the account into consideration, right? So these are certain things that that irks me, right, when I see people selling pauses, right? Okay, but anyway, come. Then of course we move on to our portfolio size, right? So now the portfolio size, it really matters, right? Because now let's say I have a $7,000 versus a $70 million account, right? On a $7,000 account, maybe I can afford to risk maybe 1% or even 2% risk per trade, right? But on a $70 million account, right, I can only afford to risk 0.1 or 0.2% risk per trade, right? So because when your account is small, right, especially if you're in the thousands, right, even 100,000 is still considered very small, right? So if your account is small, right, you would kind of want to focus more on wealth accumulation, right? And then of course when your account is big, right, millions of dollars, then of course you would then try to go into wealth preservation, right? So these two words, right, accumulation and preservation, right? So back then when I was trading, right, I kind of limit, I kind of have this plan, right? So maybe let's say for example, right, I was risking 2% risk per trade, right, until I hit like maybe $50,000, right? So $50,000 I was risking 2% risk per trade. Never as I go to let's say maybe 100,000, so from 50 to 100,000, maybe I was risking 1% risk per trade. And then from 100,000 onwards, maybe I'm risking 0.5% risk per trade, something like that, right? And in the middle, right? So maybe let's say 1%, sorry, 2%. Okay, so 0 to 50K is, sorry, 1K to 50K is at 2% risk per trade. Maybe somewhere around there, I can't remember, right? I would reduce my risk to about 1.5% risk per trade or something like that, right? And then of course, or maybe even 1K to 25K, 2% risk per trade, 25K to 75K, maybe it's a 1.5 risk per trade, and then for 75 to 100 is at a 1% risk per trade, and then from 100 to maybe 150, from 100 to maybe let's say 250K is 0.75% risk per trade, so on and so forth, right? So your risk is continuously going down and down, right? So portfolio size will affect your risk tolerance, right, as well as your comfort level. Okay. So what are the levels of risk tolerance? Now we have the aggressive risk tolerance. We have the aggressive risk tolerance, moderate risk tolerance, and conservative risk tolerance. So, like what I've mentioned, right? So if your account is smaller, right? If your account is smaller, right? I'm not asking you to be aggressive. All right. I'm just sharing with you guys, right? Like how I did it, right? So when my account was about $1,000, right? I was super aggressive, right? I was risking 2% risk per trade, right? And 2% risk per trade is very, very aggressive really. Because 2% risk per trade, if you are wrong 5 times in a row, then of course you are down 10%. Okay. Account accumulation or account preservation, which is harder? I would say the accumulation is harder, right? Accumulation is harder. Actually it's both, right? Actually it's both. So when your account is really small, the stress level will, because when your account is small, right, you have more to lose, right? If you are risking higher percentage, so let's say for example, if you are risking 2%, right, on a $1,000 account, right, and 2% is quite it's quite huge, right, in terms of percentage, right? So when you want to grow that account, right, when during the good times, it's enjoyable, but during the bad times, right, when you have when you have when you face drawdowns, right, when you have losing streaks, right, then of course that it becomes quite demoralizing, right, because you are down so much percentage in terms of percentage. So let's say so like just now what I said, right, So if you are down 10%, right? If you're down 5 trades in a row, right? 10% risk, 10%, 10%, 10% drawdown, right? So 10% drawdown, right? It's quite demoralizing, right? If you're down 10%, right? And then so when you're accumulating, it is quite hard, right? At the beginning. But of course, now preservation. Now let's talk about preservation. Preservation is also very hard, especially if your funds is growing. If you are not, but okay, how should I say it? Preservation is more hard when in terms of when you made a mistake, right? So let's say for example, if you make a mistake on a $1 million account, but instead of risking 0.1%, you risk 1%, right? So that's not that's not. I mean, that might not seem like something that's too huge, right? But you have to be disciplined enough to say that, okay, I made this mistake, right? So let's say, and it happens to me before, right? So instead of 0.2%, I was risking what 0. Oh no, instead of 0.2%, I was risking 1% risk per trade, right? So what happened was that you have to be disciplined enough to recognize that, right, as of 5 trades, right? And the next trade that you take, right, you have to be disciplined enough to come back into 0.2% risk per trade, right? Instead of just risking 1%, right? So I think both accumulation and preservation is hard, but I think preservation is a little bit easier, right? If you don't make any mistakes, right? If you're very diligent, if you're very observant, you double check your risk, you double check your position sizing and everything. I think preservation is easier, right? And of course, preservation is also easier if you do not. Preservation is easier if you do not manage funds, right? So if it's your own account, right, preservation 100% easier. I would choose preservation anytime, right? Because on the accumulation part, right, then of course you have to be stressed, right? Because you are risking, right, huge percentage, right? Even though you might not see much, right? 2% is considered a very, very high risk. Okay. So risk parameters. Now, what are risk parameters, right? Risk parameters are a certain set of rules, right? So when parameters are met, right, all trading halt, right? And of course, there will be daily parameters, there will be weekly parameters, right? So I want to share with you guys my parameters currently, okay? So my parameters are, right, I don't have a daily or weekly parameters, right? So my current parameters are, right, a 20% drawdown, right, will halt all trading, right? So we have arrangement with all the brokers that we work with, right? So in the event that there is a 20% drawdown, right, all the trading is halt, right? So all positions close. I think of it as a stop out, right? So 20% is a stop out level, right? 20% is a stop out level. So let's say, for example, if it's a $1 million account, if it goes to $800,000, right, then of course all trading will be halt, right? All the accounts will be locked, okay? And 10% drawdown. What will happen is that 10% drawdown. Now 10% drawdown is a very, very serious thing, right? So 10% drawdown. What will happen is that all investors will be notified, right? And of course, I will be calling for a meeting, right? I'll be calling for a meeting. It's something like a margin call, right? But of course, it's just like a warning call, right? Hey, our account is down 10%, right? Of course, I am personally managing all the funds and all the accounts, right? So 10%, when 10% is hit, right? I will then call for a meeting, right? And yeah, okay. So at 20% drawdown, so very good question. So what happens at 20% drawdown? So 20% drawdown, investors will have an option, right, to withdraw the funds, even though it's not at December, right? So even though we are not in, so my payout is every December, right? So if we ever hit 20% drawdown, right, then of course the during December, right, during December we will, sorry, if we ever hit 20% drawdown they don't have to wait till December to take out their funds, right? So they can choose to take out their funds or they can choose to remain inside, right? So far we have not hit, right? So far we have not hit 20% drawdown. The maximum drawdown we actually went we actually go into is, I think, was a 12% drawdown, right? 12% drawdown. Okay. So what you can do is that you can also kind of formulate your own trading parameters, right? Now, daily parameters, right? X amount of losses or X percentage in drawdown, right? Daily drawdown or weekly drawdown, right? You will stop all trading for the day or for the week. Okay. Now, let's talk about risk management system. Now, there's two types of risk management system. Right? Number one is the compounding risk system and the static risk system. Now, what is the compounding risk system and what is the static risk system? So the compounding risk system is, let me just grab my pen. So this is the compounding risk system. Compounding risk system is, let's say, for example, if you have a $1,000 account, you make $100, right? They will give you $1,100. So risking a 1%, what's your 1% going to be? 1%. 1% on 100, sorry, 1% on 1.1K, it will give you what? It will give you $11. Right? It will give you $11. Right? So your 1% risk is $11. So this is compounding risk system. Okay. And static risk system. Now, static risk system is basically, right, no matter how much money you make, right? No matter how much money you make. Let's say, for example, if you made $500, right? So your account now is $1,500, right? And your 1% risk is still $10, right? Based on the initial capital, right? So if you ask me, so why don't you guys take a guess, right? Which risk management system am I currently using? Why don't you take a guess? Which risk management system am I currently using? Compounding or static? Wow, Moses, very smart, huh? What about the rest? Compounding or static? Oh, William, Kevin, Ming Eng, Gary, John? Compounding or static? Compounding. Okay, so I'm currently using the static risk management system and not the compounding risk management system. Now, why? So, very, very simple. Now, always remember, right? Compounding is most suitable for account. Is more suitable for accumulation, right? This is more suitable for accumulation. ACC, accumulation. And static risk management system is for preservation. Preservation, PRE. Right? Okay. So when you are growing your account, right? When you especially when you're so when you're growing your account, basically, right? You will use the compounding risk system. Now, compounding risk system, the drawdown is higher, right? Your account tends to fluctuate more, right? Up and down, up and down, more. But of course, if you're a profitable trader over the long run, right? you are compound, you know, your account will grow faster, right? Now, static risk management system, right? It has lesser fluctuations, and because you are risking the same amount, right? So you're risking the initial balance and not the current balance, right? So you're risking the initial balance, right? And your account wouldn't fluctuate so much. So when it goes to drawdown, it does not go into too much to draw down. Okay, so this is compounding and risk, right? But of course, I wouldn't teach you guys, right? I cannot really tell you guys like when to use compounding or when to use risk. Sorry, when to use compounding or when to use static, right? Because so I'm going to leave it with, if you want to grow your account, use compounding. If you think that, okay, yeah, I have enough money already, I have enough money to work with, right? I have enough money to trade with. I don't want to, have too much fluctuations, too much drawdown into my with my current account, right? And then of course we can use the static risk management system. Okay. Now, percentage risk per trade. No, time is not on our side today. So percentage risk per trade, we have pip value, right? Pip value, so pip value is different, right, for every quote currency, right? And of course, say no, right, to lot size based on account size, right? This is just total bullshit, right? And of course, risk a fixed percentage per trade, right, based on balance, right? Calculate lot size based on percentage risk, right? And of course, the recommended percentage risk per trade is less than 2%, right? Never go anywhere above 2%, right? So what is risk reward ratio? This one, I think most of you already know, right? Calculated in units of risk against potential rewards, right? Help assess the expected returns and the risk of a given trade. For example, 1:9 risk reward ratio. Okay. Now, what is a good risk reward ratio for beginners, right? If you have a 1:1 RR, right, your win rate have to be over 50% in order to be profitable. Right? If you have a 1:3 RR, your win rate has to be over 33.33%, right, in order to be profitable. Okay. Now, how to have a higher risk reward ratio? Number one, optimize your entry strategy, and of course by setting a tighter stop loss. Right. So the more accurate you are in your entries, right, the smaller and the tighter your stop loss will be. Right. Okay. So this is, for those of you who don't know how to calculate your position size, I've gone through this every day. Right. So this is the link for the position size calculator. Just enter the currency pair that you're trading, your account currency, your account size, the percentage risk that you want to take, and the stop loss of your trade that you want to take. Cool. Okay, cool. So we have 5 minutes left. So what I want to do is I want to quickly go through the charts and see if we have any suitable trades that we can take. Okay, guys. Very nice. Okay, I'm going to take a buy limit order on NZCHF. Stop loss will be about 10 pips of loss. Giving us a really nice potential 1:6 risk reward ratio in profits. Okay, for NZD-CHF, right? A small trade, right, shouldn't should take us maximum about 1 to 2 weeks till it plays out, right? So this is the trade that I'll be taking, NZD-CHF. Small trade, small trades. Okay. This will be a slightly risky trade, so I will set my stop loss at break even quite aggressively. Right? Take note, take note, take note, because I'm not there 24/7, right? So this will be a slightly more aggressive trade, right? And I repeat again, I will be setting my stop loss at break even more aggressively, right? How aggressively, I don't know. I have to wait till the market develops, then I would know, right? Okay, but not immediate lah, not immediately. Wow, set a stop loss at break even. Not immediate. Probably a wait, probably a few hours, 30 minutes, few hours, 4 hours, 8 hours. I don't know, right? Okay. Now moving on. For those of you, because we are on a time crunch, for those of you who wants to enter, we just take a screenshot. We're moving on in 3, 2, and 1. Because overall trend is a downtrend. Yes, that's right. That's why I am. That's why I am moving my. That's why if I take the trade, right? That's why if NZD CHF were to were to have a buy, I would. If, I mean, if it enters the, sorry, if it triggers, if price triggers the buy limit, right? I will enter. I will set my stop loss at the even very aggressively because it's a downtrend. You are right, Kelvin. Right now we are still looking to see. Okay. CDCHF, setting a buy limit here. With a potential take profit level of about 1 to 1.8, right, risk reward ratio. Right, on a CDCHF, this is my entry. Right, so for those of you who wants to follow, go ahead and take a screenshot because we are currently running on overtime. Okay. And 5, 4, 3, 2, and 1. Moving on. I'm not looking at AOD CHF because the levels, the key levels are not as good as CAD CHF. So I'll just be looking at CAD CHF unless it fails. Then of course I'll be looking at AOD CHF. Now AOD CHF, we do have the level, we do have this key level here marked out on my red line, which I will not be entering because I think we just have to wait and see how market reacts first. And then of course finally we have AOD CAD. Nothing much going on AOD CAD, right? And I think that's all that I have for you guys tonight, right? Okay. Okay, ladies and gentlemen, unfortunately, time now is 9:03. I know we have overrun a little bit, right? But of course, ultimately, I just want to share my analysis and share my trades with you guys, right? Appreciate you guys for staying, right? Additional about 3-4 minutes, right? So once again, guys, thank you guys so much for joining. Hope you guys have an amazing evening. And hope to see you guys tomorrow, right? And don't forget, right, to share with your friends, right? Get them to come into the webinar, right? Everyone can learn, everyone can earn together. Right? If you have friends, if you know someone who's struggling in trading, right, just intro them to this webinar. Can not, guys? Okay, right? No pressure, right? Hope to see you guys tomorrow, Tuesday to Thursday, right? 8 p.m. to 9 p.m. Singapore local time. If that's all, hope to see you guys tomorrow. Have a good evening and good night.